Good Sunday evening, option traders. This is Sam, the Trader Geek, with your Sunday evening, June 15th, 2025 option review video and market preview. Hope you're having a great weekend. And we're looking at some major performance metrics for last Friday. And this one is for a losing day, pretty much, for everything but the VIX, and which was up 15.54%. And other than gold and the dollar up slightly, everything was in the red on Friday. But in terms of major markets, so getting some reaction to the Iran-Israel attacks and counterattacks. Looking at the major markets for last week, we can see the VIX was the leader all week long, up 25%, 24%. Gold up 3.63%, and long bonds up about 1.15%. Down at the bottom, we see the micro caps down 2.33%. The smaller they were, the harder they fell. IWM being the small caps down 1.42%, mid caps 1.4%, the Dow 1.3. So on the week, the SPY was kind of flat, down 36 basis points. Looking at the quarter to date performance, we're getting like 2 weeks and a day away from the end of the second quarter of 2025. Bitcoin leading the way about 27%, Mag 7 up 16%, and the tech heavy NASDAQ up 12.38%. And despite the weakness this past week, the microcaps are up 10.48% on the quarter, as is gold of 9.8. The worst, obviously, VIX is losing about 6.5. TLT long bonds with the yields going up, they're down 5.16, and the dollar losing almost 5% this quarter. So helping the gold trade and the other precious metals doing well. On a year-to-date basis, speaking of precious metals, gold up almost 31%, the VIX still up 20% on the year, if you can believe that. But Bitcoin up 12%, and NASDAQ up about 3%. And the dollar 7.65% down. And there you go again, the small caps and micro caps down the most on the year as far as major market goes. Mid caps down 3.34%, and Magnificent Seven still down 2.33%. And I think only about 3 out of the 7 Magnificent Seven stocks are up on the year. If we take a look at sectors on Friday, only energy and metals and mining were up a bit, with financials and retail stocks losing the most on the day, which was mostly a negative day. We look at the sectors on a weekly basis. You can see that energy was the best performer last week. No big surprise given the geopolitical turmoil in the Middle East. Financials losing 2.5%, and retail stocks losing 4%, even though we had a pretty good consumer confidence number come in on Friday from the University of Michigan. Metals and mining up 1.47%, and healthcare finally getting a little bit of a recovery on the week. Going to a quarterly basis, on a quarter to date, metals and mining up 16.74%, technology up 16%, and retail stocks still up on the year, about 9%. At the bottom of the list, healthcare still not very healthy, down 6.77%, and energy lacking the energy. So yeah, I'm here all week. Try the veal. XLP minus 1%. These are the defensive stock, not doing too well. But you can see that some of them are not doing all that great on a quarter to date basis. And then year to date, if we look at sectors, metals and mining up 15%, industrials, which is a kind of an indicator for the economy, up 8%, utilities up 7%, and that includes a lot of the nuclear stocks that are really doing well these days, and then communications up 6%, with discretionary down 5.62%, and that includes the weight of Tesla, somewhat Amazon, and even Apple, which is not doing great. Retail stocks down 5.33%, and IYT transport stocks down 3.42% on a year-to-date basis. Just take a look quick at the Magnificent Seven on a year-to-date basis. We can see Apple kind of taking the lead to the downside over Tesla, down 21.5%. Still can't get out of the basement, but only 3 out of the 7 are positive on a year-to-date basis, with Meta being the leader. Microsoft up 12.68 and Nvidia up 5.72%. So we can see the Mag 7 is not the only thing that's bringing the market up. In fact, if you could kind of say it's kind of dragging it down, given the overall performance of the Mag 7 so far this year. Given that we've taken a look at the major markets, let's take a look at the major indices before we take a look at our trades. And we're looking at the daily, the weekly, and the monthly of the SPX. Some call it the most important index in the world. And you can see on a daily basis, we stopped one time framing to the upside, which means that we finally violated the low of one candle and took out the low of it on the next day. And then we did it again on Friday. So we stopped one time framing to the upside, and we came and closed below the 8 EMA on Friday. And you could see this sideways MACD not really giving any indication of where we're going to pop up or down. But right now, the fast line is under the slow line, or the signal line, and you can see that we could pull back a little bit more here. We're right at a parabolic stop and reverse there at 59.52, but I don't, I'll think that if we close under 59, say 39, we're not going to, we're probably going to get more of a pullback. But you can see this red line here and green line there. Those were the options implied expected move ranges for last week. And we just basically went nowhere, as we saw with the SPY earlier, doing nothing on the week. And so if you were a seller of options, you would have made out, but I still would not do it with the ranges that we have. And we'll see this week why it's even more important that you don't sell options, you buy them. Looking at the weekly, we got a topping tail here. Within, say, 100 points we got of the all-time highs. And this is by no means that we're just going to go down without a fight, or that this is the end of the run. By no means have the bulls given up their advantage. You can see the MACD is positive here on the weekly, and that's going to take a bit to turn that around. So one day kind of does not make a trend, as they say, but we did not get a pretty candle. I think we are in for a little bit more consolidation and pullback, and given that we have an FOMC meeting on Wednesday, you just never know what happens. And by the way, we do have a market holiday on Thursday, Juneteenth. Is that holiday, so the markets will be closed all day on Thursday. Looking at the monthly, this big hammer proving itself. And so far this month, it looks like we're taking out that parabolic stop and reverse here. If we can hold these ranges into end of the month, we're halfway there. It means that we probably have more upside. And I do believe we have more upside. You can see bullish chandelier, bullish, bullish chandelier stop, a bullish parabolic stop and reverse. So all indications that the bulls still have the advantage, but with the possibility of some consolidation, some pullback. We could pull back to the 200-day here at 5,800, and there'll be nothing wrong with the uptrend so far. So, but I think that better hold, or we're going to be looking for a lot more trouble in this market. So I don't think it'll get down there, but anything can happen. Here's the NDX, looking similar to the SPX. Under the 8-day topping tail on that candle. It tried to go up on Friday, but um, came right back down. Nobody wants to be that long on a weekend where there's geopolitical news. We can see the flat MACD here. And yeah, we were at overbought levels here at the 70 on the relative state strength index, and we're coming in at 59. So 50 is kind of neutral. So we have some room to work further down if we want to. Looking at the weekly, you can also see a topping tail there, but a positive MACD, and we still have room to get overbought on a intermediate term basis, so to speak, on the weekly. But we did, looks like we tried to tag the options implied expected move. Actually, we didn't. We didn't even come close. I'm looking at next week's options implied expected move, and we can see here that we can pull back a little bit more and it wouldn't be affecting the uptrend. Here's a monthly, and you can see that we've working on our third up month in a row, and we have still a bearish parabolic stop and reverse stop, but that can be taken out. It still has time, but we just need a little bit of positive action. And again, we have a holiday, not shortened, but holiday week with one day gone. So we have 4 days, trading days, and one of them is an FOMC day. So should be fun. Russell, we've got something that looks really worse, and God, the Russell just cannot get out of its own way. When weakness appears in the market, the Russell is the leader, but on the upside, definitely not. So I've tried to put on trades on the IWM and set them up, but it just doesn't look good. And so you can see here, we're flipping back down to negative, and 2 gaps in a row after 2 gaps to the upside. So I don't know if we have an island reversal or what have you, but definitely weaker than the rest. And you can see here, this candle looks worse than on the I mean, on the NDX and the SPX. And you look here and you can see the MACD is positive, but we just came down pretty hard last week once the market showed weakness. And then you can see on the monthly basis, MACD solidly still negative, still needs a lot of work on the weeklies and the monthlies. And we have a topping tail so far on this with the bearish PSAR. So we'll see what happens, but I think that the bulls have the advantage and the edge. We could be just seeing some short-term weakness. We do tend to see in the last couple of weeks of June a little weakness into quarter end, and then we start to head up back in July. So that's might be what we're seeing at the moment, but geopolitical fears also factor into what's going on today. So that always throws the wrench in normal seasonality, normal action. What you see, this is a triple witching options expiration week on Friday. Again, shortened by a market holiday on Thursday. So what they need to accomplish normally in 5 days in terms of repositioning and selling out options and closing out options and buying new ones will have to be done over 4 days. So it should be a rather not only the geopolitical volatility, but also the volatility involved in repositioning for a quarterly expiration that we have this week in terms of triple witching. Taking a look at the VIX, you can see that the VIX was up about 17%. We saw earlier, been consolidating sideways, and it was about time because we were flirting with a lower Bollinger Band, and we got a pretty good bump on Friday. You can see on the weekly, we took out 2 weekly candles. So that's no small matter. And then we also, you look at the monthly, I don't really pay much attention to the monthly, but the weekly shows the strength, and we could see a higher VIX, and a higher VIX obviously goes with a higher, a lower market typically. Speaking of the VIX and uh, switching on me here, I like to look at out in time to the options to give us an indication of how much fear is out there. We closed at 2082 on Friday. Let's call that 21. So if we go out to the 22 calls, you can see they're pricing out at about let's call it 242, and then we look at that's $1 out of the money. We look $1 out of the money on the put side, and that would be the 20s, and so that's about $1.60. So about a 50% premium for the calls versus the put. And if you're buying the calls, and if they are favored, it means that you have some bearish views on the market. Now, this was as much as 10 times the premium for calls as they were for puts last week. So a lot of the fear has been factored out of this particular market. So we might have used up a lot of the energy on the downside on Friday. But again, geopolitical activity can make all the difference in the world in terms of what we see next week or this coming week. Um, Speaking of this week, I always like to look at the options implied expected move, and that is basically what we're looking at. We have two expirations on Friday. One is the AM expiration. That doesn't count. We want the one that closes on Friday, and that's about 129 points for this week versus what we had for the past week, which was about 100 points. And keeping in mind that 100 points was for 5 trading days, this is for 4 trading days this week. So a big jump in the volatility means a big jump in the expected move, but it also means because we have a 4-day work week or trading week, that this is even more meaningful on a points per day basis. So I would certainly be a buyer of short-term options, not a seller, because we could see that move in a day or so. So with that said, let's take a look at our trades, and let me see if I can get this set up properly and get back to what I intended. And here we go. All right. So we closed a bunch of trades last week, took some profits, but no earth-shattering moves. I mean, a lot of sideways action. So it's nice to have puts and put spreads on bullish ones, at least to help our P&L along. And so we start with Avago alphabetically. And after the earnings gap down, we see that we've done nothing but gone sideways so far. And we're basically, you should have taken about half off if you have multiple units of this. We're up 47%. And even Friday, it was only down $7 or 2.88%. Not bad for Avago. So if you haven't taken some off yet, you should. And this one is due to expire on Friday. So I'll be keeping an eye on this one. And in fact, if you close them all, I wouldn't blame you. Hopefully, you don't give too much back if we get a gap down on Monday. BLDR driving me nuts. Finally climbing up, then coming back in again. Thought it was ready to go, but this is a builder stock. It is a uh, long-term trade that we have. We're still down 31%. Looked like it might want to get going and close above the 50-day, but that was not to be. But again, this is a longer-term play, and we'll keep an eye on it. But it is kind of, if not boring me to death, but getting on my nerves because we can't seem to go up and stay up. We go up a little bit, and we go from 102 all the way up to 119, and then we come back down to 111. So that's the volatility we have. Costco, we put on a new short put spread, and we came down a bit on Friday. It was down about 1.25%, $12.50. I guess I was a day early getting this set up. I think we put it on here on a down day. Um, and so Costco, we're down 32%. Got plenty of time. July 950, 925, $40 out of the money. Not worried about this at all. And our short strike is definitely below the 200 day, so not worried about that one. If we take a look at Dell, you can see that it looks like it's starting to roll over. You can see the MACD here. We have July 18th. We've taken one profit target, but again, this is going to kind of follow the weakness in the market, especially the weakness in tech. Still have plenty of time on it. We've taken one profit target, and then we're down 20% on the rest. But we should be okay on Dell. I still like it a lot. Disney holding up pretty well. Friday only down 67 cents. We've taken one profit target and we're still up 23% over on this trade, at least at this point. And then we will take a look, but we have until September on this one. We'll see what exactly there is. Futures have just opened, so that's the bells you're hearing. And let's take a look. We could see what's happening. Well, it looks like the Nasdaq is opening down about 70 points, and ES is down about 20 points. So continuing a little bit of the fear trade that started on Friday. The YM or the Dow Jones down about 159 points, and the small caps down 10. So very early, just getting started. So a lot can change, as we saw on Friday, how much we came back, and then on more headlines gave a lot of those intraday gains back. But Disney looking good. Nothing to do here. We won't have earnings until late July, early August. So this one can still do its thing. GIS, here's another one that's kind of really frustrating me. Whether the market is good or not good, this thing can't get out of its own way under the 50-day. But staples should be doing better, or defensive stocks should be doing better under the circumstances with weakness in tech and the other momentum names. But this one just can't seem to get going. But September 19th, I've said it before, fundamentally, this is cheap. But at some point, I might just pull the ripcord on this and say, it's just not working. We're way too early. And the sideways actions is not conducive to long premium, although we did sell a put. So don't want to get kind of hurt by the loss of long premium on the call side, and also get hit on the put side should we get down there. So GIS, not impressing me at all, but still early days. Humana, we sold a put spread on this one, and we sold it for about $2.60. Hopefully you've taken about half off at least at this point. We're up 70%, and this one expires on Friday. So watch your profit targets and take some off, and let's not give too much back here. But it does expire on Friday, but looking really good as healthcare seems to be catching a bid. Speaking of healthcare, here's MRK. This one is also doing good. We have taken one profit target, which in retrospect was a little bit too close to our cost basis, but we do have till June 30th. I wonder if we rolled this one out. Let me see if I had this one rolled out and just forgot to put it. No, we're still in June here. So we'll have to keep an eye on this one. So we got a bunch of expirations, and Merck, we may continue this trade into into July this week. So I got to keep an eye on that one. But nice profit, looking good, and you can see MACD solidly positive. So can't complain about this one. We can complain about Nike. Not looking good after looking like it wanted to tend higher, but Friday down 3.6%. We haven't even gotten to our first profit target, and this one is a combo. We have the 70 65, 70, 55 put sold. So 65, 70 call spread and the 55 put sold. Um, really not showing any decent strength for the amount of movement we had. We've kind of gone nowhere and we're back to the 60 level. This one, although it goes out to July, I'm keeping an eye on it. I might have to cut it short if Nike is not going to show some reversion to the mean that it should at this point. But the fact that it couldn't get out of its own way, 65 was too tough for it, tells me I got to keep an eye on this one. NVIDIA really looking good, holding up very well. We have a rolled trade here, so our next profit target is at 18.25. I thought I adjusted that, but we had rolled this out, and I'm still looking to roll out the short put spread that we have. So if we look at what's on the table here, we got the 135, 160 call spread in January, and then we have the 75, 50 put spread in January sold. So the bull put spread 75, 50 should be rolled out, and Friday might have been a good day to do it, but I didn't really want to do it. I wanted to see perhaps more weakness on Monday, and then we can look to roll that put spread down to get us a little bit more premium. But NVIDIA is still looking great. PLTR making new all-time high, hitting at $140 on the 11th, and then holding up Friday very well, up $2 or 1.61% after on a really bad day. So this is a strong stock. We have this put that we've sold on here. We're looking to roll this on any weakness. It is the July 18th put. Actually, we did roll it, but I'd like to roll it up a little bit further and collect a little bit more premium. We're at 54 cents. So with some weakness this week, we might be able to roll this up and collect a little bit more premium. But couldn't ask for anything more except perhaps being long calls, but you just never know. Now, here's one where PayPal, I really agonized over putting out a trade, but everything I was looking at told me that there was going to be probably some more upside, but maybe I should have heeded the 200-day a little bit more. But the PayPal coming in like it did on Thursday, and that's with Visa and MasterCard and Square or XYZ, whatever you want to call it these days. All of these got hit because some of these retailers declare that they're going to adopt stable coins. And so any of these payment systems got hit, and PayPal got hit by 5%. So our timing couldn't have been worse. But here's a stock where I haven't had a lot of luck with it, but it sure looked good. And now the MACD is flipped down and the RSI is back under 47. So we'll have to see what we do with this one. I might not give this too long of a leash, but we do have out into August for a reason. But I certainly don't like how weak it was on Friday. But given that there was news there, I'm going to give it a pass for now. But it is on potentially the chopping block even this soon after we put it on, given how badly it held up given the recent strength. RKT another new trade from last week. Looked like it was going to head up. I like the fact that it closed over 14, and that was kind of what I was looking for. But the weakness on Friday, of course, geopolitically related, brought it back in. So it hasn't done anything wrong, but I do like the look. MACD is certainly positive, and holding the 200-day on Friday is a nice thing. It was only down 40 cents, which is about 3%, but still, I like the look of Rocket, and hopefully we can book our first profit soon. Now, SDS is our hedge. This is the double inverse S&P 500 options, and this one did not move as much as I expected it to on Friday. Maybe we'll probably get that move on Monday to take some profits. I would have thought even at the open on Friday. I thought I was looking for a double, and we didn't even come close. I think these options topped out at about 95 cents or a dollar, which I wanted more than that on these. But hopefully, I didn't back the wrong horse in terms of a hedge play. But these were definitely cheap, and sometimes cheap is cheap for a reason. And um, most of the time, when the volatility starts stacking up, these calls really blow up in our favor. And I'm glad we have a hedge, but um, it's just not moving like I think it should. But Friday was only one day, but this is our hedge. Hopefully, you have it. At least we're finally up on these. If you added to them, if you didn't, then you're flat on them because we started this position out at about 75 cents, and now we're at 76 cents. Big whoop. SPY, we have a put spread in expiring this week. And on Friday, I had you optionally sell some of the 580, 570 put spreads and keep the 490 puts on. And we got about 77 cents. So the way the market was moving up, I thought, okay, if we're done with the downside and we can turn green by the end of the day, then we might as well harvest some profits on here. But at this point, if we take a look at the 580, 570, I'm going to maximize this and go back to the SPY. Let's look at the 580s. I mean, if we do see a lot more weakness this week, this could turn out better than I thought. But if we look at the 580, 570s, just worth about 83 cents. So they didn't really appreciate that much more on Friday than where we sold some of them for 80 cents, 77 cents. And that was optional. We didn't close out the 490 short puts in August. Again, only if you have the margin and you want to take that risk. And doing that with this inflection point spread in the past has worked out well for us, but I don't see a lot of big weakness heading our way. I just see more volatility ahead, but we're going to have to do something this week. If the market is weak, as it's at least looking like, well, look at that. The ES was down 23 points just a few seconds ago, and we're already only down 16 points. So we could be green by the open. It wouldn't surprise me at all. But anyway, the SPY, keep an eye on that. We want to get back and make sure we claim our premium this week. If you don't hear me alert it, keep an eye on your stuff so that you can decide where you want to close the long premium and perhaps keep the 490 put on. So we were definitely early with this hedge, and we're going to manage it into expiration. TLT, we have a short 85 put. That's in August, and we're down about 20%. We're just meandering. I mean, look at this mess. We're down, we're up, we're down, we're up, we're down, we're up. And now we're hanging just above the short strike of the 85 puts in TLT. We've done several rolls. And I would have loved to buy premium, but I'm not going to do it under the 50-day. I mean, the long bonds could have further to fall, but so far, this is putting us to sleep. It has until August. Nothing really to say or worry about. UNH was starting to look really good on the upside, which meant that we sold this put butterfly, and this was a broken wing butterfly or an unbalanced butterfly. No, I think this is kind of a broken wing butterfly. I always confuse the two formats. Broken wing because we bought a 280, 270 put spread, and that's a $10 wide spread. And at the same time, we sold the 270, 250 put spread. So the 270, 250 is $10 wider than the one that we bought. So that makes us net long premium or net short premium, and also means that we're what a bearish trade that we had on turned out to be bullish as well. So in this case, we sold it for a 60-cent credit. If we want to close it, and this expires Friday. We could do it for a 9 cent debit. And so I'll be looking to close these out if we get to like a nickel. I wouldn't blame you if you close these out now. If you haven't closed any yet, you should. But normally when I get below 10 cents, I'm itching to close these. And I was just giving this a little bit more room, at least UNH, to come down and maybe give us profitability on the put spread. But I don't think we're going to get there. The odds are this is going to expire above 300, and we're just going to keep the premium. So beats a stick in the eye, doesn't it? All right, XBI, our last ticker, coming in again. Again, this healthcare showing some strength and finally coming back in. We've taken one profit target. We have rolled these out to July. They were a June combo. Now we're in a July combo, taking one profit target. Next target is 3.25. What we are down 60% on this particular trade. I closed out the other one. It was profitable, and I started a new trade rather than roll out and try to complicate the math and make this easier for tracking purposes. But still holding up well. Plenty of time on this. We made a little bit money on the last one. Our short strike here is the 80 strike on the put. So we're over $3.60 above that short strike. So we'll see what happens with healthcare and XBI. But those are all our trades that we have. I'm kind of back this week after a really good financial planning conference last week. It was kind of exhausting, actually, class after class after class, but glad to be back and paying attention here more closely and being around in the room, which I was every day, especially during some of the boring sessions. So I always have my laptop with me. In any case, we have the FOMC meeting on Wednesday. We have a market holiday on Thursday, so the markets are closed, and then triple witching expiration on Friday. So a lot of volatility, geopolitical mess, and just more volatility. And I think the bulls still have the advantage, but we'll see how they fare. And it wouldn't be unusual to see consolidation and another 50 to 100 point pullback, and there would be nothing wrong with the uptrend. And this is seasonally the time where things do pull back in June, especially into quarter end, where there's some repositioning by the indices and by portfolio managers. Well, I'll call it a day. This has run longer than I thought. And I'll see you in the room on Monday. Thanks for watching. If you have anything for me, at Trader Geek on Twitter and Trader Geek Sam in the forum, hit me up. If you need to email me, sam@optionmarketmentor.com. Take care, and thanks for watching. Bye-bye.